Discipline dictates action. When I started in 1981, New York Stock Exchange would trade 50 million shares a day. Now we trade billions of shares a day. We built this algorithm that looked for unusual trading patterns in the market. We're seeing 7.5 to 8 million quotes per second. But then once you find those patterns, then it makes it a lot easier to coattail on the smart money. You could make a fortune.
How does a guy who was playing football for the Chicago Bears end up being an expert in one of the most complicated financial derivative instruments in the world?
Those endorphins popping in your head when you make money, there is nothing like it. It's also the closest thing that I ever found to that sort of applause when you were playing pro football, knowing that you were stacked against all of these people and walked out making a bunch of money. Nothing felt better than that. I have conservative leanings, but I really want to help people, whether it is through charity or whether it's through work. I'm a guy that wants to give people a hand up. Put the phone down, put the computer away for a while. When you find what you really want to do, go knock on doors and do it.
The world is changing. Inspiration is everywhere. It has never been so easy to connect, share, and bring people together. We're learning from others and finding the best in ourselves. Challenging our beliefs, sharing our vulnerability, overcoming our fears, transforming ourselves so we can transform the world. How far can we go? This is London Real. I am Brian Rose. My guest today is I love sitting down with Jon Najarian because he used to be one of the traders in the pits of Chicago. And when I was a young trader on Wall Street, I would call down and I'd hear all these guys yelling and screaming, sometimes 300 of them corralled in a pit, all trying to get the best price. These guys were legendary traders, and I always wanted to sit down and meet with them because they were pure traders. They really had an instinct for what trading was all about, and Jon Najarian was one of them. He also became one of the best option traders in the world, and I love sitting down and talking to him about the evolution of trading, option trading, and what he's doing today. But I was super excited that Jon offered to finally reveal what made him a legendary options trader. And so in a private broadcast that won't be available on YouTube or anywhere public, he's going to show an exclusive group of people and London Reelers how he's been using special infrastructure that's only available to institutional investors. This is a way to get information directly from the exchanges even days before an event happens. And if you click on the link below or go to londonreal.tv/options, you can sign up for this free exclusive event and learn how to trade options and build your portfolio. Again, this will not be available for very long. It will not be anywhere public. So click on the link below to sign up. And now sit back and enjoy this incredible episode about trading with Jon Najarian. This is London Real. I am Brian Rose. My guest today is Jon Najarian, the former American football player turned professional investor, money manager, and media analyst. You have earned a reputation in the industry as an option trading expert and pioneer, developing patented trading algorithms used to identify unusual activity in stock, options, and futures markets. You spent 25 years on the Chicago Board Options Exchange as a floor trader before selling your firm to Citadel, one of the world's largest hedge funds. You've been on television for 20 years and currently co-host CNBC's Halftime Report and Fast Money with your brother Pete. Jon, welcome to London Real.
Brian, what a pleasure. Love watching your shows. I love your interview style. And I've learned so much from the guests that you've had on your show. So I am delighted to be here It's going to be a fun conversation.
Thank you so much. I'm looking forward to this. You know, I spent a couple years in Chicago. I've been down in the pits of the Board of Trade and the Mercantile Exchange, and I want to talk all of that stuff and options in your life. So I'm super pumped. First of all, what's it like being in London? What does the city mean to you? How does it compare with other cities you travel to?
Oh, I love London. I mean, every week, Brian, I fly back and forth between Chicago, where I live, and New York City to do CNBC programs. And I love that. And New York is New York. It's a very special place. But London is really close to New York as far as the vibe, the energy. There's, of course, a different feel to it. And I like that difference. If it was just another New York City, it wouldn't be as special as London is. But it's cool. When I come here, I ride the underground. I'm used to calling it a subway in Manhattan, but I do the same thing in Manhattan. I ride the subway. Do I get chauffeured around in cars? Yeah, but I know the fastest way around London or New York is underground. And I love going down there, and it's just, like I say, you get the vibe of the place by being with people rather than being in the back of a car by yourself.
Yeah, and you like walking the streets as well.
I do, and I like doing it because these old knees need to get a few miles on them every day, so I try to get 10,000 steps or more every day just because I know it's good for my heart, good for my mind, and I love sightseeing. So it's fun to walk around in London. This is a great walking city.
Yeah, well, you took the words out of my mouth. I love this town a lot. So, look, I want to get into your whole life and your whole story because it's fascinating stuff. But before we do that, a lot of people had written to me and said, Brian, I want to know more about Jon's option strategies because you really are on the cutting edge and you've been doing this for so long to understand how options can tell you so much about what's going to happen, about what the markets are. And so we've just recorded a separate video that goes more into detail about your weekly options profit strategy and your event, America's First Options Millionaire Summit. That link is below, or they can go to londonmill.tv/options. But for people that don't know much about that, what kind of makes your system different and your philosophy different? I mean, you're obviously on television every day talking about this stuff. What makes you the guy?
Well, I think there's just so much information, as you know, from being a derivatives trader in options that isn't available in stock. So they're telling you time frame because an option has an expiration. Which expiration are they trading? That tells you how long perhaps the position should be on for. They tell you strike price. So for instance, Apple might be trading at $220 a share. Are they buying those calls, which we'd call at the money, or are they buying a call up here at 225, 230, and so forth? So again, time frame, strike prices and things, how much leverage do they want in that trade? All that information, Brian, is encapsulated in each contract that we're tracking. And when I started in 1981, New York Stock Exchange would trade 50 million shares a day. Now we do that in the opening. You know, in the first 15 minutes, 50 million shares go up. Now we trade billions of shares a day. And options, which are, of course, a derivative of those very stocks that we're talking about on the New York or NASDAQ, options trade with multiple strike prices. Like Apple might have 300 different strike prices because they've got weeklies that go out this week, next week, 3 weeks out, 4 weeks out. Then you've got monthly options and so forth, and multiple strike prices of all these. So there's so much data out there that it used to be that we'd see about 200,000 quotes per second. Now we're seeing 7.5 to 8 million quotes per second.
Wow.
So you can't do it with the human eye. You have to do it with a computer. But then once you find those patterns, then it makes it a lot easier to coattail on the smart money.
Now, a lot of people get scared about options and it seems complicated for them. And I know it took me a couple of years to first have my epiphany, and we're going to talk about that later. Should people be scared of options, or is it an education process?
Just an education process. And once they understand them, they won't want to trade any other way because you can define the amount of risk you want to take. If I buy Apple at 220, using that example again, and I buy 1,000 shares, that's nearly $250,000 that I've got on the table. I don't think it's going to vaporize because Apple sells a ton of products. But could Apple make a 10% correction which would mean it drops by $20? Sure, and we've seen it happen a lot. Could it also jump $20? Yeah, and we've seen that happen. But I'd rather trade that option for $1 that could let me ride along with that $20 upside move. And if I'm wrong and it goes the opposite way, I lose $1. I don't lose 20. So I think it's all about leverage and defining your risk. And if you can do those two things and do them right, I think you can be in this game a long time and make money.
Yeah, which you have done with your brother Pete. And one of your mantras is, I think you said, and we'll talk about later, any monkey can pick a stock,
Yep.
but cutting your losses and riding your wins is what makes a trader make money in the long run and makes them stick around.
True. Yep. It's all about discipline. And, we always say it. Pete really harps on people and says, discipline dictates action, DDA. So if you want to make sure that you're going to be at the table a long time, if you have this much of an edge in Vegas, if you're counting cards and they don't know it, you get this much of an edge. What if you could turn that edge into this much of an edge? Because you can, but you have to be disciplined with options. You have a lot better odds with options than you ever do in blackjack or any other game in Vegas.
Yeah, it's a really good analogy. All right, so people want to learn more about that, they can click on the link below.
Please.
Go to londonreal.tv/options. Again, it's America's first optioneer millionaire summit, and you're one of the best in the business. I mean, you really have been there and done that. I mean, back in '81, before anyone really understood the option price in theory, you were doing it, then you saw the theory come, and now you look at those options for real information. It's great stuff. So thanks for sitting down with me on that.
Pleasure.
I would love to start with you to find out, how does a guy who was playing football for the Chicago Bears end up being an expert in one of the most complicated financial derivative instruments in the world? It doesn't seem to fit. So how did that happen?
Well, I came to Chicago to play football for the Bears, and there were a lot of great football players, but the Bears were a lousy team. They were just beginning to build the core that was going to be part of that Super Bowl run that they had. But this is '81, and that was '85 when they won the Super Bowl. So the issue was that I got to play because Mike Singletary held out on his contract. As soon as Mike signed his contract and the NFL gave him that extension from the time he signed until he'd start counting on the roster, my days were numbered, Brian. But I had a great run. It was a lot of fun. Got to play in 4 games and made a lot of good friends.
What's that experience like, being in professional football? I mean, that's the peak.
Yep.
What's it like in the locker room? What's the mentality like? I mean, obviously you played a lot of college ball to even get in that situation. What would people not know about behind the scenes?
What jokers the guys are. Almost everybody is funny. They're always spoofing people, or like Walter Payton always called me Elvis, because believe it or not, I had hair up here back then. And he'd always want to come over and flip my hair, and he'd say, "Oh, look, Elvis is in the room," and all that kind of stuff. Walter, one of the greatest guys around. But everybody in that locker room, virtually everybody. There were a couple guys that were, really hard and would never smile and things like that, but most of them were jokers. And they were great athletes. I remember guys like Otis Wilson, who was drafted, I believe, #1 the year before I got there. So I think he was their #1 draft pick in 1980, and I came in '81. Otis was a beast, had like a 28-inch waist, 56-inch chest. I remember going into the gym with him, and he's got like 120 in each hand, and he's just, repping out like this with 120s, and I'm going, I mean, some of those guys are just physical beasts, Brian. And, just every muscle rippling and things. And you can imagine what it's like today, because that was '81. I've been in locker rooms since then with friends and things like that play on teams like Cam Newton with the Panthers. My brother Paul, his roommate at Cal was Ron Rivera, who's the coach of the Carolina Panthers. So we'd go down and see the Panthers and go into the locker room and things. And those players, they're extremely lean, except for the linemen, they're extremely lean. They're carrying 3-4% body fat. Wow. They're not carrying 16-20%. The linemen, of course, have to be bigger because everybody they're pushing against is 300 plus pounds.
Yeah.
But all the other guys, the tight ends, the running backs, the wide receivers, shredded, just shredded. They're some of the best athletes on earth, but they're all funny. They're all funny.
I heard a recent American professional player saying that when it comes to Sunday, he gets very quiet in his house and doesn't talk to his wife because he's about to go to battle. And he's saying, I'm going into what could actually feel like a car accident.
Yep.
And so she says he doesn't talk that day because he's really getting his head in the game. I mean, you know, what's it like before a game where you're knowing you're going to go in there and get busted up? Probably a lot of guys are working with injuries anyways. I mean, it's a hard sport.
Right. I tell people all the time that these guys, whenever anybody criticizes the pro athletes for making the millions that they make, I say they earn every penny. Because at any given moment, one of their lives could actually end. Now, for the most part, they don't, but they take hits and they take injury to a point where their lives are shortened significantly. And luckily, in my case, I only played those 4 games. And I was playing on every team. I was playing on punt team, punt coverage, punting team, kickoff receiving team, middle linebacker. I was playing on all of that because, again, it's pro football. You don't have 100 guys like in college or 120 guys on the sideline. You've got 40. And some of them are injured and can't play and all the rest. And that means that, you know, it's all the more work for you. And I'd say the biggest thing is they're a lot faster than anybody can imagine. When those collisions happen, especially in kickoffs and punts, I mean, I broke a helmet, my whole face mask shattered in Kansas City. And then somebody was offsides and they flagged it and we had to do it again. So I had to go to the sideline, grab a helmet from somebody, snap it on. It didn't fit right, and I had to run down again. Luckily, the guy ran the other way that time, so I didn't have a head-to-head combat. But those hits are intense, and you feel them for days afterwards in some cases.
Yeah. What did football teach you about life? Because you played in high school and you played in college. I remember you told me one time your college team had to go play in a prison.
Yep.
Like literally you had to go inside the prison and play prisoners that were 10 years older than you.
Yeah.
What does that teach you about life?
The prison part taught me I never want to go to prison because when those gates shut, that sound, you don't ever want to hear that. Even the guards, I'm sure, don't like it when they're in there. And I know a few of the prison guards. My brother Pete works out with a lot of them up in Stillwater, Minnesota, which is right next to the Stillwater State Prison. And so the worst of the worst are in that prison. Sadly, I saw a lot of the guys I went to high school with in that prison. But as far as playing football in a prison, dirt field, no grass, just lime on the field, outlining, the areas that we're playing in. And whenever a play went to the sidelines, there were no stands. So the prisoners literally stood on the sidelines watching their team, the prison team, play us. And the prison teams only play other prison teams other than us. So they're used to playing other big older guys, and here come all these young guys. And we had, knock on wood, we had better skill than they had, but they were big and mean. And but every time you'd go to the sideline, you'd make a hit on the sideline, the guys would say, watch it, he got a knife, or something like that. And you'd jump up quicker than you've ever jumped up and get back onto the field rather than hanging around the sidelines. But after the game, they were so grateful that we came in and played them. They shook your hand, they looked at you in the eye, and they'd say, you never want to be here, man. You never want to be here. And I'd say, I get it. I get it.
Wow, real scared straight.
Yeah,
huh?
but good guys,
Okay.
that made a wrong turn in life. But hopefully they get out and never go back.
And your brother Pete played as a pro for 6 or 7 years.
He
football.
did. Pete played all over. He played for the Seahawks, Vikings, Tampa Bay, and the Raiders.
And I know when you were in the pits of Chicago, you liked hiring guys that had been on team sports. Why is that?
Discipline.
Discipline.
Yep.
Talk about
Simply discipline. Because I know, Brian, because of the kind of workouts you do, that you could do, I already know you know derivatives, but I know you could do it because you've got discipline. If you have discipline, you can do my job. But if you don't, Like you said, a monkey can pick a stock every once in a while and be right and make a bunch of money. And they always say, don't confuse a bull market with luck, because you're just lucky to be in that bull market. Everything's going up, okay. So tough to pick a stock that's going down in a bull market. But if you don't have the discipline to take your profit, not just your loss, cutting losses keeps you alive, but it won't feed you if you don't take profits.
Right.
So you have to be disciplined about pulling some money off the table. If you just let it ride, let it ride. We've all seen, Hollywood depictions of people at the slots or people at a crap table, and they're letting it ride, letting it ride. I guarantee how that ends. I know how that ends. You can't. You can let a lot of it ride, but you have to be pulling some off all the time. If you're not going to survive.
Yeah, that's one of the first things I learned when I started trading on Wall Street is the discipline factor. Mm-hmm. And it's really hard to get it because it's very emotional trading stocks. And as you said, a lot of times it's men in these situations trading stocks, and we have big egos.
Oh, yeah.
And so that gets involved, and that always ends in tears, right?
Well, and you're right, because I know more women that are really good traders. They just couldn't be floor traders. Now, some could, obviously. Maybe there were like 2 or 3% on our floors that were women. Most of them don't want to be down there because it's disgusting. Yeah. Guys are spitting on each other, either because they shout too loudly and spit goes flying, or because they're trying to spit to get you not to stand next to them. They wear the same clothes because they made money in that suit, or not suit, but in the same shirt. They made money in that shirt. They're going to wear it till they lose money. So you can tell how much money the pits are making by the smell. You'd go into the pit, if those guys are wearing the same underwear 4 days in a row, they're not changing because they're making money, and they're superstitious as hell. Traders tend to be superstitious and disciplined. And when you have I had a trader that worked for me once, Brian, that he went home, he was a newlywed. He went home, and his wife met him at the door, big kiss. He went into the middle of the living room, took off all his clothes. She figures, honeymoon's still on. Nope. It was, he took all the clothes, cut them up with scissors, and threw them out the window. He said, I'm never wearing that shit again. And she's like, what? And he's like, if you lose money, it's not your fault. It's the clothes. But I mean, you hear stories like that all the time about people that, they want to pin that blame on anything but themselves. And yet, there are circumstances, of course, that we all could have, if we could have just had that much more air in our tank, we could have made it back to the surface. If you had that much more money in your account, you could have made it through Black Friday or through the worst days of 2008, 2009. But if you don't have discipline, you won't have that last little bit of air you need to make it through and make the big money. Yeah,
no, that's really well said. All right, how do we get from football into trading in the pits? And then I want to talk about what the pits are and what, explain why they even exist in the first place for people to understand. But how'd you make that move? It's not obvious.
Right. My agent was a trader, and he was managing money for people. So he said, John, if you come down to the pits, because I didn't want to go up to Canada and play, and it was too late, the season had started, nobody's going to pick me up off the waiver wires because I wasn't a superstar. If you're a fading superstar, maybe they'll pick you up off the waiver wires at the end of training camp. But I wasn't that guy. So I didn't want to go up to Canada and make almost nothing. So I said, I'll work for you. He said, if you work for me down there in the pits, I'll give you a place to live for free, but I won't pay you because you're worthless until you learn it. So I'm not going to pay you anything. So I went down there, did that for 6 months. 3 months into it, the light went off and I figured out what was going on, and then I loved it. But I hated the first 3 months because I didn't understand what was going on.
And why take an American football player and stick him in the pit? Why not go to the University of Chicago, just down on the south side, and get one of these PhD quants and put him in there that knows economics and finance?
Right.
Why?
And you and I both know the answer to that question, because the PhD quant from the University of Chicago is going to stand in that pit and he or she is going to be looking around at all the screens and trying to figure things out when they're going to buy them and sell them. Meanwhile, 5 different guys are going to elbow them, get the hell out of the way, and push them, shout at them, criticize every single thing they do, get under their skin. I mean, it's a lot like what I remember your interview with David Goggins, and when those drill instructors are drilling down on those guys to break them. Traders on the floor do that too. And every time you lose money, they'll rub it in. Oh, nice trade. Hey, Brian, how'd that one work out? They're on you, because if you're standing there, I'm going to make less money because I need all the money that I can make in this area right here. And all of a sudden, Brian is standing right here. And I'm like, well, what if he cuts into how much I'm going to make? I'm going to make half as much? Screw that. Hey, Brian, nice shoes. Whatever, just anything. So that's why. We'd see chess grandmasters come down to the floor. We'd see guys that, were backgammon players, pro backgammon players, guys that could count 4 decks in a game of blackjack would come down. Some of those guys could make it, but they'd have to have thick skin and they'd have to be really disciplined and put up with all those other things I mentioned, the smell, the physicality, all of that. They'd have to be able to put up with that. That's why you didn't see a lot of guys with real thick glasses that were the quant types and the engineers.
Right, so being big, physically big, strong, and not to be intimidated is a big asset back in the day in the pits.
True.
First of all, what is a pit? Why is everybody in a pit? Why is it happening in Chicago? Why isn't it in New York City or LA? And what was actually happening in that pit?
Okay, so pits were literally, the first pits were octagon-shaped pits where it's a series of steps higher and higher, and they would trade grains in those pits because that's really what Chicago was all about back when. It was trading grains, wheat, corn, oats in the pits, then live cattle, and that was over at the Merc, pork bellies over at the Merc. They had prejudice against each other too, so Board of Trade was mainly Irish. So if you were Armenian like me, or Italian or Jewish, it was really hard for you to get onto the Board of Trade. They have a book that goes back to Abraham Lincoln's days, literally into the 1860s, where it's about that thick, and every page of that book, 2 people had to sign for Brian Rose to be a member. The 2 people had to recognize that you were an honest guy and that you would adhere to their rules, and they had to nominate you, just like in a country club, to be a member, and they had to sign their names in that book alongside your name. And so it was very hard to be a member back then, so the Merc sprung up across town. Same idea though, those same octagon-shaped pits, and all these guys would stand in there and shout, buy, sold, as far as for levels of buying pork bellies, live cattle, corn, whatever it might be. And every once in a while, Brian, somebody back in the day would come running onto the floor with a raincoat on, and they'd have their clerk hit them with a bucket of water, and they'd come and running onto the floor in the midst of a drought. And everybody knew it was a drought, and so the price of corn spikes. Why? There's going to be less of it because of the drought. And all of a sudden, you see a guy running on soaking wet, and he's selling everything. You think it's raining out there, even though we don't grow corn on LaSalle Street. Nonetheless, you'd be shocked, and you'd say, sold, 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 sold. And then he's trying to buy them all back. Well, now they have big jumbotrons on all the ends of the floor, so you know exactly, what the weather pattern is in Brazil.
But back then, they could spoof the market and play games and things like that.
Yep, but that's it. Those pits were where all of the firms could meet in one place to set prices for corn, for soybeans, for gold, and they could basically meet there and bids and offers, and that's the fairest way to decide what the price should be, would be all these multiple hundreds and hundreds of guys, and women in some cases. Like I say, women are great traders, but they generally aren't on the floor, they're upstairs.
Right.
But it's not that they can't be on the floor, it's just these days, sadly, instead of 6,000 traders in Chicago, now there's about 300 or 400.
Right. And so Chicago was the center because it was basically all the commerce in America is coming there through railroads and everything. So it was the place to trade, these massive markets. And then later, they adopted bond futures and all these financial instruments because they had the know-how, the liquidity of trading. They had all the people there. So they started trading instruments that had nothing to do with Chicago, really. I mean, the bond markets were probably originally New York or Washington, D.C., and now they had futures on everything.
Yep.
And it was the spot. And I remember in 1993, I went from MIT to Bankers Trust in New York City. I got on the floor. They gave me a big phone with a bunch of buttons, and they're like, this is the Chicago Mercantile Exchange, this is the Chicago Board of Trade, go. And I called up, I think a guy named Dan Sullivan at Bankers Trust Futures, and he would be down there, and I could hear everyone yelling in the background. And I'd be like, Dan, where are the front four contracts? And he'd be yelling at guys, hey, come on. And he would be signaling in to the pit, and the guys deep in the pit would know where the inside market was, and they would signal to the guys outside the pit. They would go to the phones and to me, a trader in New York, and I would be buying and selling because that was the inside market. And that was the information on where the real price was. And this is the old school way that trading was happening in the 90s, right?
Right. And
in the 80s.
Where you're so right, of course you're right, but where you're so right is in futures, which you're talking about with bonds and T-bills and so forth, only the last price goes on the tape, the last traded price. So what if somebody is willing to sell them at a lower price, but they haven't traded yet? The last price is still, for instance, 16. But what if they're offered at 14? You know, the guy's out there, at 14, at 14, at 14, and nobody's buying them. That's vital information to you in New York or anybody trading, but the last price they see is 16 going across the tape. So, you know, if that guy then is selling for you or anybody else and he's going, at 13, at 13, at 12, at 12, and they're pushing out these prices and no response, the last traded price is still 16. So now you'd know that on the phone and you're going, well, where's the bid? And the guy's looking out there, you know, with two phones like this, and he's looking at, where's the bid? Where's the bid? And the guy goes, 10, it's at 10. And he goes, sell them down to 10, you know, or whatever. But otherwise, you're just going to focus on the last traded price and you miss everything that trades in between.
Yeah, you'll have the wrong information.
Yep.
And that's why a great broker, and I later became a credit derivatives broker in the over-the-counter markets, a great broker gives you the exact information you need that can make or lose you millions of dollars.
Sure.
And so if you've got the guys on the inside that can get you the info, that's why it was such an important piece to have that information and those market makers down there.
Huge.
And later when I moved to Chicago, I used to go down, and I was being covered by a guy at Solomon Brothers, down to the Board of Trade. I took my mom down there, and to go into the bond future pit, which is probably the most liquid instrument at the Chicago Board of Trade, and there were 300 guys, 400 guys in there. It was mayhem. And everyone's probably shocked by listening to John scream and yell, but that's what's going on down there. And guys are doing the, 2, 3, there, and they're yelling. They're
20, 25.
Yeah, and then
30, 35. You know.
All these hand signals so you can communicate, because there's no cell phones. Nothing was electronic back then. Guys are literally buying and selling. They're writing contracts with each other. The whole world is on phone lines, surrounded with everyone around outside of the pits. They're signaling into people. They're telling the counterparties' names. I used to work at Bankers Trust, and they would move the tie like this. This meant Bankers Trust. It was a banker, and everyone had little code signals of who's buying what.
Yep.
It's crazy.
Bear Stearns.
Bear Stearns. That's what it is.
With the claws. Yeah.
Right. And so this was kind of the good old days when you went down there, and that's where commerce took place, right?
Yep. And that is where.
And the people inside those pits also provided liquidity, and they made markets. And maybe you could explain to people why that's such an important thing, and why that doesn't necessarily exist today anymore by those guys.
Right. It was that all of those bids and offers, so we were the people in the middle. The buyers and sellers were coming in to meet someplace, but they needed somebody to make a market. Otherwise, the buyer and seller would just meet or not meet, because this guy's willing to sell at 14, this guy's willing to buy them at 12. There's no trade. There's no trade there until either this guy steps up to 14 if this offer is still there, or this guy steps down to 12, or they meet in the middle at 13. Otherwise, these are just sitting there and it's silent. You know, all the bids and offers can come in like that, but without the guys in the middle that are making trades. So it became incumbent on us, Brian, the guys in the pits, to know that there's a big 14 offer over there. It's Merrill Lynch, or it's Dean Witter, or it's E.F. Hutton, or it's Prudential Bache, or it's Bear Stearns, or Lehman, or Goldman, or whomever, but it's over there. and the bid is over here, and it's one of the other big banks or whatever. And so they're just trying to buy them and sell them, knowing they can lean on that offer. So if I get short and I need to cover, I can hit that broker. Buy them, Tommy, I'll take them. And then you buy and cover and cut your loss. Or if I've sold them and they're falling and I think they're going to keep falling, I can hit that bid over here. So all the traders in the middle are taking risk for moments in time, just knowing that they have all this stuff in their head about there's a buyer there, a buyer over here rather, and a seller over there. And if I can scalp in between, I know I have a safety net on either of these two sides. And all of a sudden the market starts moving up and down, and these bids and offers are moving back and forth, and the traders have to read that tape, as they say, and then jump ahead of it just quicker than the next trade. And to the extent that you could do that, you could make a fortune. They used to always say that you can make or break a fortune in the stock market, but you make or break corporations in the commodities markets. Because again, you're trading a natural gas contract, for instance. Natural gas, one contract is $1 million. One contract. So you can imagine that if somebody says, I'll take 100, he's taking down $100 million worth of natural gas. That's a big player. And that's why it can make or break. And when commodities make big moves up or down, they just go. There's air pockets, like happened when those Saudi oil fields were hit by the drones. The crude oil contract, WTI, West Texas Intermediate, jumped 20%. As soon as it opened for trading Sunday night, jumped 20%. Sold off immediately, but jumped 20%, sold off to only being up 10%, and then fluttered around and finished up 15% on the day over a 12-hour period. But that initial jump to up 20%, that air pocket that happened, I guarantee you broke a lot of people on that. And that's, like I say, you can break corporations on those kinds of moves.
What kind of money did you see guys make down on that floor?
I think good traders would make millions of dollars, good traders. And on our floor, there were about 2,000 traders just on the SIBO. And like I say, the good ones are leaving with 5 million, 10 million in a good year, things like that. And I think all the guys upstairs in New York figured out that if those guys are making that, if I can turn this electronic and get rid of all those guys in the middle, that's my money.
Yeah.
I can be that guy and eliminate 2,000 people, and all of a sudden, instead of that being $1 billion or $2 billion that's being made, that drops onto my bottom line.
Yeah. Well, and there's a great movie called Floored that you were in as well that talked about kind of the story of a lot of these traders and then how it kind of disappeared as well. But it was interesting, like one of the guys is saying, like, I don't have any health insurance. This is my own money. So if I get stopped out on West Texas Intermediate, it's it. It's over. My savings is gone. I go home to nothing. Yep. It's not like some corporation is bankrolling you.
Right.
So when I was in Chicago, I was at First National Bank of Chicago, that big, beautiful IM Pay building down in the Loop, and I was on the 6th floor. We were trading our interest rate derivatives, but we always used to talk about the guys down in the pits with the big fucking balls that would go in there and make markets in the face of fear, because that's what you do.
Yep.
Call in, where's the market? No one knows where the fucking market is, but you guys made the market, and you might get slammed, you might get hit, you might take hits, you might take losses, you might make wins. But that takes a serious amount of discipline, of moxie, and that's why you get to these weird, like you said, superstitious things these guys have. We knew one real big local that said, if I had a bad argument with my wife the night before, I wouldn't even go in because I'm going to make bad decisions, because I'm going to be emotional and angry, and I'm going to lose money, and he would just stay out of the pits. I heard all sorts of stories about that. Is this accurate stuff I'm talking about?
Oh, yeah. I knew guys, Brian, that when they got to the elevator to go either up or down to the floor, they'd press a button, and if a down elevator came and they needed the market to go up, they wouldn't get on. And they wouldn't even go to trade that day. They'd say, screw it, I need the market to go up today. I've got 3 down elevators in a row, I'm out. That kind of stuff. But as strange as that may seem, I think a lot of the, like you said, the guts that it took to stand in there and do it. The reason that they do it, of course, is money, but it's also the closest thing that I ever found to that sort of applause or those endorphins going off in your head when you were playing pro football or college football or whatever. It's so addictive because when you're making money, it's just, the greatest feeling you can have is knowing that you were stacked against all of these people and walked out making a bunch of money that day. Nothing felt better than that, except I asked, you're a fan of Billions.
Yeah.
So there's this coach, a performance coach on there named Wendy, and she's the wife of Paul Giamatti, and she works at Axe Trading, and Giamatti is the Elliot Spitzer character, of course, in Billions. He's the attorney general. So she coaches the guys into getting in there and making the most money. I've met a couple Wendys in my life, and I've always asked them, I said, feels so good when you make money. I mean, it's just the best. But I said, I've never understood why losing any amount, if I lose $1,000, doesn't matter that I made 100,000. If I lose 1,000, it feels worse than the 100,000 feels good. I said, why is that, Wendy? And then she said, John, that's the easiest question I ever get. And here's why. She said, that's nature. Nature is telling you, don't screw up. Don't fuck up. Don't do that. Because when you lose, even though you've cut your loss, hopefully, and you lost $1,000, she said, that's gotta feel bad. And it's gotta feel worse than this feels good. Because if you're a wolf and you're out there and you're the alpha and you take down an elk, that means that the whole, your whole herd eats well that day. You eat first, but everybody in there, they're all sniffing your butt and they're, rubbing up against you and everything else. And you feel good because you were that alpha that took down that elk. But now, a couple days later, you're out there looking for another elk and you smell the smell of another pack and I got to get the hell out of here. I'm by myself. I'm the scout and I'm out here by myself and I smell that there's another pack here. I can't make that mistake twice. If I do, that other pack will rip me to shreds if they find me.
Right.
So she said that's why losing has to feel worse than winning feels great. And that's something you have to deal with when you're a trader.
And that's where the discipline also comes in as well, because if you let yourself run by those emotions, then you won't be a good trader. And the discipline something is again hard to explain, but people always heard you should buy low and sell high. But if you're an untrained trader, you will actually do the opposite.
Yep.
You'll buy high and sell low, because when these positions start going down, so say you bought a house for $1 million and someone tells you it's only worth $500,000, most people will say, let's just hold on and wait. And a lot of people as well will do the opposite. If they sell something and it goes up, they're like, oh, well, then let's sell more because it now looks more attractive. Both of those things will get you killed in a trading environment.
Right.
So you actually have to act the opposite of human nature, which is why you need that discipline, right?
Right. That discipline is everything. And it's similar in Vegas. They call it good money after bad. If you're sitting there at the table and you're pushing in good money after bad, you got to step away from the table, get your mind straight, then you can come back and go at it again. But if you're betting on, a bad hand, that's the fastest way, doubling down on a stock is the fastest way to go broke.
Yeah.
Because there's nothing that says it can't just keep going, just like nothing that says it can't keep going up if you're shorting it.
Yeah, I'm getting some flashbacks to some Gordon Gekko lines here. So Gordon Gekko once said, never get emotional about stock, right? And he also said the most valuable commodity I know of is information.
Yes.
And that's why you want to know what's happening in that pit. And that gives you everything. And when I later worked as an interdealer broker, my clients wanted me because I could give them the information. And you couldn't get it on an exchange or on a ticker. You had to know because I knew what Goldman was doing and Morgan Stanley was doing, and that's what I could do with a few phones on a floor of a building. It was down to that information. And so that's super important as a broker.
And it still is.
Yeah.
I mean, just to your point real quick, the reason when I started trading and I went into the IBM pit, I traded IBM. It was the only place IBM traded in the United States was in Chicago in the options exchange, the Chicago Board Option Exchange. Didn't trade anywhere else. So I saw everything. I saw Goldman, I saw Morgan, I saw Prue, I saw Bear, I saw Lehman, I saw everybody when they were coming into the pit to buy or sell. So you knew again where that big seller was or where that big buyer was. And that information was invaluable. But we didn't realize it back then. We just thought we were great traders reading the tape and we were making, millions of dollars doing that. But then the SEC said, you know what, Brian? We think that you're colluding to keep prices wide. We think that IBM should trade on the Amex in New York and on the Pacific in San Francisco and on the PhilX over there in Philly. And if it doesn't, we're going to accuse you guys of rigging markets and you're going to be subject to antitrust and everything else. The exchanges listed everything everywhere. So all of a sudden IBM trades 4 different places. Now how smart are you? As far as me, I wasn't that smart because now I'm only seeing a quarter at best, or maybe 30% if we're really competitive in Chicago. I'm seeing 30% of that picture, and not seeing Goldman, not seeing Morgan and all the rest of that meant I'm not so smart.
Right.
I don't know where that stock is going the way I used to. The seat prices fell from $700,000 back down to $200,000 in a matter of months because traders weren't making the same amount of money.
Interesting.
And then that's why we developed that algorithm. You weren't trying to lead me into that, but I'm going to throw that one. So we built this algorithm that looked for unusual trading patterns in the market because it would reassemble the data of as if IBM was still just trading in one place. So we'd look at the time-sensitive data of every trade that's happening in San Francisco, Chicago, New York, and Philly, and put it all together into one spot again, except it's electronic. The algorithm is grabbing it and telling me a block of stuff just went up over here, John, and it went up on the offer. That means they bought it.
Right.
Or it traded here on the bid. That means they sold it. So then I could go back to doing what I did. And I started, making money again.
Yeah.
But it was a rough 6 months or a year when you're not making that money.
To continue watching the rest of the episode for free, visit our website londonreal.tv or click the link in the description below.
Hi, it's Brian Rose from London Real, and I've just sat down with Jon Najarian, legendary options trader, Hall of Famer, and TV celebrity. You might know him as host of CNBC's Halftime Report, or from his books, How I Trade Options and The 22 Rules of Investing.
I think there's just so much information in options that isn't available in stock. I think it's all about leverage and defining your risk. And if you can do those two things, I think you can be in this game a long time and make money.
Well, in just a few days, Jon will finally reveal what made him a legendary options trader. In a private broadcast that won't be available on YouTube or anywhere public, he'll show an exclusive group of people how he's been using special infrastructure that's only available to institutional investors. Something that allows him to get a critical piece of information directly from the market exchanges. Information that can tip you off about big market moves a few days before they happen.
We built this algorithm that looked for unusual trading patterns in the market. Once you find those patterns, then it makes it a lot easier to coattail on the smart money.
Now, as a former Wall Street banker myself, I am super excited to share this investment strategy for the very first time. As the host of this episode, I'm able to offer you exclusive rights to a seat at his free training. But you must act now to secure your place. So click on the link below or go to londonreal.tv/options to lock in your spot. And I will see you there.